Good evening, everyone, and welcome to tonight's special presentation of Toni's Market Club. I'm Tina Hosley, the Director of Operations for ToniTurner.com, and I'll be facilitating tonight's session, and Toni Turner will be our presenter for this evening. Please take a couple of moments now to read our disclaimer. We are pleased to present tonight's special session of Toni's Market Club. Before we begin, I'd like to give you a little background information on Toni. Toni is the best-selling author of A Beginner's Guide to Day Trading Online, 2nd edition, A Beginner's Guide to Short-Term Trading, 2nd edition, and Short-Term Trading in the New Stock Market. She's also co-author, along with Gordon Scott, of Invest to Win. Toni is a popular educator and sought-after speaker in the financial arena. She speaks regularly at trading forums and conferences across the United States, including college campuses, traders expos, and money shows. Now I'm pleased to turn the microphone over to Toni so that we can begin today's session. Thanks so much.
Thank you, Tina, very much. Can everybody hear me? All right, well then let's get started. I'm Toni Turner, and I want to welcome you to our webinar today. Today we are going to we're going to talk about Toni's Market Club, and I'm going to give you trades, so you won't go away empty-handed. We only do sessions of Toni's Market Club, or sessions like this, I should say, 2 or 3 times a year. We don't do them often, so I'm really gratified that you all joined us today. Toni's Market Club is, all the folks in it is deep in my heart. I'm going to show you again briefly what we do to Toni's Market Club, in Toni's Market Club. It's been going on now for 11 years, and I'm proud to say that many of our members in Toni's Market Club have been with me and Tina, Annette, and Kathleen for 11 years. So it's quite a compliment, and sometimes some of our members have to leave for a few weeks or a month or a couple of weeks, but I'm always gratified at how many come back. They come right back in. So again, I hold Toni's Market Club and all the folks in it deep in my heart. And I'll show you a little bit about what we do today and tell you a little more about it. So let's go on here. First of all, this is how we run Toni's Market Club. The sessions are every Monday from 4:30 to about 6 p.m. Eastern, and we kind of do the Market Club in a way that you might even do your trading day. The first thing we do is we start off with the question of the week. Now, this is our psychological and emotional approach to the market. Excuse me, and we'll look at this a little bit more in the next slide. But please believe me, I know so many traders out there, and you know, folks, I've been speaking and doing this for over 20 years, and so many people say, oh, your mental approach doesn't matter, your emotional approach to the market doesn't matter. And I can tell you from personal experience and from teaching thousands of traders that your mental and emotional approach to the market is key to your success. I remember one time when I was a new trader, and I was day trading like crazy. I mean, I would make 65, 70 trades a day sometimes, and I also learned how to do that in a trading room in New York with a whole bunch of guys, and of course there was 2 teachers in the trading room. We were in a big office, and there were 2 coaches or teachers in there. We all had 2 computer screens, and we traded like crazy all day. That was back in the late 90s, in the mid 90s. And I can remember one day feeling sick. I mean, I just felt like I was getting a bad cold or the flu, and I thought, oh, typical American work ethic, right? Go ahead and go in, go to work. It will be good for you. Well, it was terrible for me. I was tired, I was worn out, I was sick, and I lost, I don't know, $3,000, $4,000 that day for no good reason. So please don't start trading any day or putting trades on if you feel like you're getting ill for some reason, if you've had a fight with somebody, if you don't feel good for whatever reason, don't do it, because you'll make decisions through what I call glasses, a lens that's covered with gray. You can't really see straight. So please, 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 before you trade, make sure you are feeling calm and confident. Calm because we think much better that way, and confident in that you are confident in your discipline and confident in that you're preparing properly before you place each trade. After we do the question of the week, and this is only a 2 or 3 minute thing, we go on with the market overview. Now, as you all probably know, traders trade from the top down. When we look at the market, we look at the big overall picture first because we want to see what the S&P 500 is doing. That's key. That's our benchmark. We also, in Tony's Market Club, look at other indexes like the NASDAQ 100, the QQQ, like the small caps, the IWM ETF, the iShares Russell 2000, which, by the way, today is flying, and that's very bullish for the market. So as traders, we look at the market from a tops-down kind of vision. Now, investors typically go from the bottom up, I'm going to say. They look, I'm not drawing that triangle very well, am I? Investors look at the stock and then they look at the market. We look at the market and then we look for a stock. So that's the difference between trading and investing, because a lot of investors say, I don't care where the market is right now. I care where it is 10 years from now or 5 years from now. With trading, we care where the market is right now and tomorrow and the next day. And if it's a core trade, we still want to get in, even if we plan to hold it, if our criteria is met for 2 or 3 months. And we do that all the time in Tony's Market Club, as long as it obeys our rules, our risk reward, our risk management. But as traders, we look at sometimes hours, sometimes days, sometimes weeks for our length of trade. So we want to make sure that the market's in a good mood, because the market very definitely influences where our stocks go. And please know that when the S&P 500 is moving higher, 3 out of 5 stocks will follow it. When the S&P 500 is moving lower, 4 out of 5 stocks will follow it lower. So we definitely care. Next, in Tony's Market Club session, we look at a review of our open trades. We usually look at the ones from last week, and I ask if there's any questions about any of the other open trades that we have. And so we go over any questions like that. I'll give you an idea. Hey, you may want to move your stop up here. You may want to take some profits here, like that. And so that is our review of open trades. And then at the end of the session, if we have room for any more, or somebody even wants to look at a stock that we're not trading, we can do that too. After the review of open trades, I jump into the mini trading lesson. Now, when I do the mini trading lesson, it's usually about 10 to 15 minutes. And I will discuss on that. We do have a strategy for day trading, so I'll talk about that every few weeks. I will talk about price patterns, or I will talk about candle patterns, or I will talk about how to recognize volume and the signals it's giving. I mean, all of the myriad topics you can think of that would go, I'm thinking, into a trading book like the ones I've written. That's what we talk about for a mini trading lesson. So it's just a little something for you to go, oh, thanks, great, I didn't know that before, that's going to help. Now, finally, we start on our trading ideas, and every week I give members 6 stocks and exchange traded, and I should say because we don't always do exchange traded funds, but 6 stocks and or exchange traded funds, and I give you the price to get in, the entry price, the stop price, and the profit target price. And along with that, I teach you, and you will know, and you get materials on our Sleeping Tiger setup. And the Sleeping Tiger setup is a setup that I devised back in 2009. I created the Sleeping Tiger setup, and I've been using it ever since. I developed it with a software guy, but I did most of it. He just got in there a little bit to try to help me move things around. But I developed the Sleeping Tiger setup again back in 2009. It's very precise. It does give you a little room if you say, I have more, let's see, I want to make a little looser trades than a strict trade that, I don't know how to explain this without telling it to you, but at any rate, it's a very clear system, a very clear strategy of trading the Sleeping Tiger setup is, and I give you all those rules when you enter Tony's Market Club. So I talk about it, you have a document that tells you exactly how to do it, and that's how we've been trading successfully in Tony's Market Club for, again, the last 11 years. And so if you think about it, you get 6 stocks or ETFs every week. So if there's 4 weeks in the month, you get 24 stock picks. And if there's 5 weeks, obviously you get 30. So that's a pretty darn good bargain in my opinion. And I've kept it that way on purpose, and we'll talk about that a little bit more in a minute. But anyway, let's look real quick at the question of the week. This is always our first topic, and we won't spend a long time on it. But again, this absolutely, definitely determines your success. So the question of the week, a recent one is, do I grade my trades and adjust my risk accordingly? Do I grade my trades and adjust my risk accordingly? And so for that particular question, and I always love that one, I discuss how to grade your trades when you, and before you get into them, if you start grading your trades, either an A trade, a B trade, or a C trade, and then if you apply, I'm going to say labels to them, an A trade is obviously one that has a really good setup with all of your criteria in mind. The market is going the right direction, the sector is going the right direction, it's in agreement with your trade, and the company itself, the stock is setting up in the right setup. You can look down and see exactly where to put a good protective stop. You figure out an entry, and then you look to see where prior where prior resistance is, so that you can gauge a profit target. Now that would be an A trade to me. Then B trades and C trades, of course, don't have all that, and a C trade would be one that you heard some guy on TV and he said, oh, Igloo ice cream is going to become the new Microsoft or something like that, and you yell, all right, and you jump into the trade. That is a C or even an F trade in my opinion. So if you grade your trades, and if you learn to do that, and you'll learn more about it in Tony's Market Club, maybe you only get into A trades from now on, because maybe you're able to stop yourself and say, I'm not preparing properly for this trade, so I'm not going to make it right now. And that's one way grading your trades can really help you. And if you get into a B trade, because you don't look at everything, but you just slide in, you kind of sort of apply a setup, and you don't know what sector it's in maybe, or you're not really sure, that kind of thing. If you get into a B trade, at least you'll say, this is a B trade, I'm putting in a stop with my broker, right? I'm putting in a stop with my broker. So at least protect yourself some way. So let's look real quick right now at, and just as we do in Tony's Market Club, I captured this chart a few minutes before the market closed today. This is a daily chart of the S&P 500 spider, symbol SPY, and you all know it well. I use the SPY because everybody can't get the S&P 500 up easily, but everybody can get the SPY up easily. So as you can see today, I hope you can see on this anyway, and you can take this full screen if you want to. As you can see today, the SPY came up. Now I have it closing here at $299.62, but I saw on CNBC right before the close and on my own charts that the SPY closed at 300, at least the S&P 500 closed at 3,000. So that we're darn near that. The highs on the SPY back in July was $302 and change. So we're right back up to these highs, and I want you to take that into consideration when you're trading. It's our job to watch the SPY in the next few days and see if price can break above that 302 line, because that is resistance. Can it break above? And the simple way to say it is, are traders, are investors willing to pay more right now? I always like to take the complicated to the very simple, because that's the way I make the best decisions. And when you do get confused, if the market does get chaotic, which happens quite a bit, if you look at all of August was chaotic, you can just simply say to yourself, are there more buyers than sellers right now? That's a simple one that I learned 20-some years ago. And in this case, are buyers willing to pay more for these stocks right now? And is the SPY have enough buyers to take it up and over $302 and higher? If so, fantastic. We can look at all kinds of trades. If in fact, though, it comes up to 300 and starts pulling back a little, then we want to be, a little bit cautious and pay attention and put our stops in and know where the first level of support is. In this case, it would be, I'm going to say, the 50-day moving average, the green line here, which is coming in right at the moment at about almost $295. So that's real nearby support. And that, of course, would also represent the, I'm making the wrong ones, represent the tops of this particular range that it traded in. Then we go back and have more support down here at 285, and of course at the black line, the 200-day moving average. So if you know those things, you can plan for it and benefit from it. So let's look at the next chart here. Now, if we were in Tony's Market Club today, this would be a review of a recent trade. Now, this is the Cheesecake Factory right here. And we just got into the Cheesecake Factory about 6-7 days ago. I think it was a week ago Tuesday, trading days, that is. So the Cheesecake Factory, we got in where this green arrow is, and I don't have the sleeping tiger set up on this page with the moving averages we use on this chart, because after all, that's reserved for Tony's Market Club members. That you can look at this and see that, again, the red line is the 20-day simple moving average, the green line is the simple 50-day, and the black line is the simple 200-day. So that can help you out for now. The Cheesecake Factory is symbol CAKE. What I've noticed over the last week, and especially this week, is a lot of the big momentum stocks, and I don't mean strictly tech stocks, I mean a lot of them in that area, a lot of the big growth stocks, I should say, same thing, have gotten up to really big highs, and they're getting a little over their skis, and the valuations are getting a little rich, and so some of them are starting to fall dramatically. So I went wandering around, because I like to get into things early, as I like to say, and have my feet up on the desk drinking champagne by the time everybody else finds it. So I went hunting for what I consider to be good companies that are oversold and have fallen really hard, and some of them have pretty heavy-duty short interest, meaning a lot of traders are short these stocks. And I knew that if the market started up, that the short covering alone would pop some of these, and of course regular buyers coming in too. So on that particular vein, I came across Cheesecake Factory, again this daily chart, and on September 3rd I said in Tony's Market Club, why don't we nibble here? If the market's moving higher, I always say, if the S&P is moving higher, why don't we nibble, pardon the pun here, on Cheesecake Factory just over $38.80, and that was on this green day that you see here. That was September 3rd. Now, when I say nibble, I say it because I give people a chance to scale into stocks if they want to, scale into positions. As you all know, and I'm making an example here, It's a lot less expensive to get stopped out of 100 shares than it is to get stopped out of 500 or 1,000 shares of anything. And especially in a pattern like this stock is not trading in an uptrend. This is not a particularly high risk trade, but it's a little risky because this is not an uptrend. This isn't a breakout of a consolidation pattern so much that's up higher in an uptrend. This is a bottoming pattern here. And so I like to scale in and scale out, and so I use the word nibble. Of course, as all members all do it differently. Some buy the whole position anyway, and it doesn't matter. You're on, you're a self-directed traders. But I said nibble at just over 38.80. Put in your stop at 36.70, which is up right at, well, it's too high, right about there. That's your initial stop. Your initial stop, and your initial profit target is 42. So in the last 6 days, Cheesecake Factory went pretty much straight up, hit the profit target where I advise people to take some profits at least, or at least raise your stop up tight. And because now it's coming into this prior resistance here at about 44 and change. So you want to, when it's encountering that resistance and it's come up in a very parabolic move here, then I think it's very bright to raise your stop up. And sometimes I'll give you 2 stops, a tight stop in case you want to, and I would put that just under Cheesecake's low today, just in case you want to sell half or a third, half, or all of your position with a tight stop and say, there, I've done it, I've got it, I'm out. And then I'll give you a longer term stop in case you say, yeah, I'll take some off the table, but I want to hold some shares too. And that's always good, so especially when you're playing with the house's money and not your money. So this is a recent trade we've made. Cheesecake Factory, we're up 11% in about 6 days of trading. And I myself would put a stop under today's low for at least half my position here, and then move my longer term stop up. And we do all that with our with the moving averages that we use in the Sleeping Tiger setup. It's all very evident where you put your stops. Okay, so that's the Cheesecake Factory, and a lot of stocks have popped like this in the last week or so, and we were fortunate that Cheesecake Factory was one of them. Besides, they have fantastic food, don't they? So after our review, we review current trades. We review past trades like that one. We might go over a current trade, and we'll go over one of those with you right now that we did just this Monday. Of course, this is only Wednesday, so I talked about it on the Monday. This is coamerica.com. It's a financial company and a regional bank in Texas, and I saw some of you signing in there saying you're from Texas. And banks, as you may know recently, financials, especially because we have interest rates going lower, the banks have gotten hit because, after all, money is the product that banks sell, and if they've got low interest rates, if they're not allowed to charge more money right now, or they don't, they have to compete with lower interest rates, then they're not making the profits that they're used to making because they can't sell their product, which is money, for as much as they want to. And as I like to say, interest rates pretty much rule the world. The interest is the cost of money. And that is a huge, huge thing in the world and the global economics. So banks have gotten hurt recently. CoAmerica is one of them. Of course, it's based in Texas, and with oil prices down, that's no big help if you're a bank in Texas. So I looked at this, and I looked at the fundamentals. I always do that for my market club trading ideas. And so I saw this was another bottom fishing for this week. And so I saw CoAmerica come down here. I saw it hold. I always look for prior support on longer term charts when we're bottom fishing, and I did so, and it's there. So we got into CoAmerica, and I said, okay, you guys, I said, if CoAmerica can move up and over just over $63.70, and the XLF, which is a financial ETF, is moving higher, then we can look to nibble or buy shares of CMA, Co-America, just over 63.70 and add over 64.50. So Co-America has already started up. Our stop here is $60.80, right down here. 60.80 is our stop. Our profit target is $68. Now, that's where we're going with this. If the market continues higher, it may be not too late to join us. I'm looking at this gap back here in July. I'm wondering if that can get filled. I do, however, note, and have told everybody, note the 50-day moving average coming down overhead. Now, when a 50-day or a 200-day moving average is moving horizontally, it's not as powerful as it is when it's moving down. So we do have this potential resistance coming through here on Co-America right now, on CMA right now. So we're up, we're in the money. It's closed today at $65. Again, our profit target here is $68, and that is saying that Co-America can move up and over the 50-day moving average. It may take it a few days to do so, but if the market's moving higher and banks are moving higher, it should be okay. It's been down for a while. So, and we only have to see. We drag up our stop underneath price. By now, everybody's stop should be up high enough using our particular strategy that they're not going to take a loss anyway, as long as they keep their stops where they belong. We've got the RSI moving higher here and the MACD moving higher here. So as long as the market continues higher, Co-America should keep moving up. And again, we're in the money anyway. So those who follow their stops are not going to take a loss. Okay, so let's move on from that a little bit here. I am going to do a really short commercial here, but it won't be unbearable. I'm just including here 2 testimonials. They are totally, I never asked for any testimonials, never have. So these were sent to me, just sent to Tina, I guess I should say, from 2 of our Market Club members. And Mark is the first one. He said, thank you for everything you do. Your 3 moving average entry and exits have been a godsend to me. See, we give you rules, exact rules to use so that you can get the most bang from your buck. You can get the most reward and have the least amount of losses. And something Mark said here made me really feel good. He said, I do not get emotional anymore when I follow the entry and exit rules that you have us follow. And that is key, guys. That goes back to your mental and emotional approach to the market. When you know you have a plan in place, whether it's my plan or your plan, as long as it's a good plan, as you know you have it in place, then those are the people that become consistently profitable. Consistently profitable. You got a rule, you do it over and over again, it works. And that's how you become consistently profitable. And the next one from Carrie, very kind of her. She said, I appreciate your willingness to teach us how to become successful traders rather than making us dependent on you. And that's what I want you guys to do. As soon as you learn this sleeping tiger setup, and it's easy, it's not hard. As soon as you learn it and know how to trade using it, it will come naturally to you. It will come automatically to you to know how to enter trades and where to set your stops and when to get out. It's fine. If you come in and learn and leave and keep making money, I'm a happy camper. That's, to me, my job is to teach you, because teaching is my great joy. My job is to teach you how to become a better trader, a more successful trader, a more consistently winning trader. And, you know, if you come in and come into Tony's Market Club for a month and then take what you know and go make $1 million, God bless you. Go for it. That's fine with me. By the way, we do not have any contracts in Tony's Market Club. When you sign up, you don't sign on a dotted line for anything. So there are no contracts at all. I just want you guys to become good traders. And over the years, this kind of attitude has served me very well because it's an open, forthright attitude. I want you all to do the best possible. And so it works for all of us. And so yes, teaching my craft to me is a ton of fun, and I'm very grateful that I've been allowed to do that for all these years. So now let me tell you quickly about the Thursday update. Our market research technician and I, Annette Helsper, work very hard on this every Thursday. I've done it every Thursday of my life for the last 11 years. I can't go on cruises and I can't go to Europe and a bunch of things because of the Thursday update, and that's okay with me because I have to have really strong internet to look at my charts and to be able to decide where exactly to tell you how to adjust your prices and so forth. The Thursday update shows you exactly what to do with each of our current trades. There's some information up front that kind of tells you the market's mood and manner. We talk about support and resistance on the major indexes and any pertinent news that will affect you. And then we go on with our current trades, and the Thursday update shows each one and tells you in a paragraph how to manage your risk, how to get the most profits out of the trade, where to put your stops, where to possibly take profits. Sometimes I'll say, please take profits, and I'll underline it. If I see a stock that I think has gone straight up and might be ready to come start down. So that Thursday update, I am proud to say that I showed to a friend of mine who runs a fund, and he said, my gosh, do you realize how much money this thing could be worth to you if you just send it out to people, forget Tony's Market Club, just use this? And I said, yeah, but I've never done that. This is for Tony's Market Club people, and that's the way that goes. So that's the Thursday update. You get it every single Thursday, so you know what to do with your trades. So the final, I'm going to give you a trade here in just a second. I did want to show you this just for a limited time only. Just for a limited time only right now. You can, if you go in and subscribe, and again, there's no contracts, you can get Tony's Market Club at a 20% discount right now for a limited time only. You can get 20% off the price for your first month. It's really inexpensive anyway. If you can imagine anybody that gives you 30 stock picks or 24 stock picks in a month and tells you exactly how to do it, it just isn't done. So I've kept Tony's Market Club price very low because I know how expensive trading can be. Again, I've been doing it for 25 years, and I know that if I keep the price low, more people can learn more, and that works for me. So we're even the low price now. We're giving you 20% off your first month. So for more information and to register, just go look at it. And if you are watching the recording of this video, you can click on the orange button that says click here for more information if you're watching the recording, and that's found right below the video. Okay, so this is only for a few days. Your discount code for checkout is 94TMC. 94TMC. That's where you put in at the checkout. Okay, everybody got it? Let's keep going. Let's keep going. So I'm giving you a new trade today if you're interested in it. This is Novanta. The company's name is Novanta. Again, this is a daily chart. The symbol is NOVT. And Novanta is a tech company. It makes scientific and technical instruments. And I looked at Novanta today. Now, those of you who know the Sleeping Tiger setup, please use that with this. But for everyone else, you can see today that Novanta, it went down. Look left on the chart with me. It moved down in December, as everything moved down last December in 2018. Then it started up in a really nice uptrend, and it did a really nice thing that anybody can trade. It walked right up its 20-day moving average. Walked right up. Very sweet. And if that's the only average you had on your chart and you followed it and it didn't close below it, you would have done well. And by the way, I use the close a lot of times for my stops. Unless the market is going nuts for some crazy reason, we use the closing price as if we have a stop price, then I'm going to give you the initial stop here. We count it as a close. We don't usually do it intraday. So many times a stock will come down like right here in this candle. A stock, now this is a scary looking candle, granted, but the stock price would come down, hit the low as it obviously did, then bounce back up. So as long as the market isn't crazy for some unknown reason, exogenous shock we don't expect, I continue to use, we use the stop price is, does it close below that price? And you can tell if you look at the market 5 minutes before the close, you can tell where your stock's price is, and if it's below the close, your close or the one that I gave you, then yep, exit the trade, absolutely. Nobody wins 100% of their trades, nobody. I know that there are people out there who say, oh, all my trades are winners. Well, yeah, and some people have Pinocchio noses too. That's an impossibility. But at any rate, Novanta, symbol NOVT, it walked up that 20-day moving average, fell down for a while in May, climbed back up again and made a very nice steep move in June, made a new high back up here. It looks like that's at about 95 or so. Fell down again, fell pretty steeply here, and then now has come in, has support at 69. Not doing a very good straight line here, am I? Moved up from that, and if we look left on the chart, we can see that Novanta tends to have support at $69. So we say, okay, buyers bought there before. That's good information to have. So we go back over, we see it pop up, we say, nah, that's not ready yet, because that would be buying the rally in a downtrend, right? And there's no consolidation, there's no retest yet. So that's a little dicey. You could do it, but I probably wouldn't. So it came up, got knocked on the head by the 200-day moving average, fell back down, and it's about 70 right there. Retested just slightly higher low there, I meant to say, right, just at about 70. And now it's started back up. So now it's moved up and it's moved above what I call the point of the W. That means that the double bottom here is in place, small double bottom here. Today, NOVT, and actually in the last week, moved above and closed above, more importantly, its 200-day moving average. It consolidated for the last few days. Today popped higher and closed above the 50-day moving average. Now, this, I want to warn you ahead of time, Novanta does not have huge volume. And usually I demand that any stock we trades over at least 300,000 shares a day as far as doing a swing trade. And our trades can be called swing trades. You can day trade this as well, of course. But because it's such an orderly stock, I am forgiving Novanta of the low volume. I'm looking at the RSI moving nicely higher in an uptrend. MACD moving up, just starting to cross over the zero line, which some people, that's the signal line actually, use as a buy signal. So Novanta here, if the market keeps going higher, it closed at $81.27. So if the market keeps going higher tomorrow, if Novanta can move up over $81.30, I would nibble on it. Or if you choose, you can buy your whole position. I will put my stop in here at about where the red line is, but that comes in at $77.90. And that's a tight stop. You want to lower it, you're welcome to, but I wanted to keep it just below the 200-day moving average. And then your first profit target can come up here. Whoops, I keep drawing crazy with this. Your first profit target can come up here to $89. So, and then the question comes in, do I have to hold Novanta till it gets to $89? What if it doesn't? And the answer is no, of course not. You got an initial stop here. If Novanta starts up and and technology starts up, which is the sector that it's in, just if it can, you buy some shares and do like you do. You watch it go up, and at this moment in time, trail your stop up underneath. I'll tell you why. It's because the S&P 500 is heading up to these new highs. If for some reason it turns around and heads lower and can't break through 3,000 and change, then some stocks that have started up pretty dramatically may roll over here. So just be wise right now with the market touching or maybe touching new highs. There's always a chance that we'll get a slight reversal. It's called resistance. It happens all the time. And so drag your stop up underneath the lows here, or use a moving average like the 10-day or even a tighter one if you want to. But otherwise, if the market keeps going higher, it appears like Novanta might be able to do the same. We will see. So with that, again, I will just tell you that just for a limited time only, our already low-priced Tony's Market Club meets every Monday. And by the way, of course, we record it, and the recording is in everybody's account at Tony's Market Club just a couple of minutes after the Market Club is over. So you get it immediately. If you can't attend live, and most of our members can't, although we have a pretty good group in there who can, if you can't, please know that the recording comes immediately. The Thursday update is every Thursday. When I have time, I put some updates on Twitter. I'll say, hey, you guys, this is really good. The stock's gone ballistic. Please take some profits here. So you'll see that occasionally. And so, again, for a limited time only, 20% off. If you want to get some information right now, you can click on the orange button below the video that says click here for more information. Okay, the discount code is 94TMC. So write that down somewhere, 94TMC. And if you get stuck, you can just go to TonyTurner.com and you'll find Tony's Market Club there too. So that's easy. Okay, and just use that code at checkout, and for your first month you'll get a 20% discount. I would suspect that most everybody will easily be able to pay for their first month and all other months by being members of Tony's Market Club. And I know that people wouldn't have been with me for the last 11 years had that not been true. So again, thank you all for coming. I really appreciate it, taking time out of your day like this. The market's doing well, and we're so happy because people are making good money. So please, please, please take care of yourself. Watch your emotional approach to the market as well as your trading approach. Keep green on your screen. Be careful out there. We hope to see you in Tony's Market Club very soon. Stay safe. Bye for now.